statistics in many low-income countries. And there are many, many more such examples of concretely helping countries build stronger financial stability institutions. The Financial Sector Stability Fund comprises key donor partners who fund this program. The FSSR offers multi-year technical assistance programs to even more countries. Partnership, rigor, and reliability. Find out what the Financial Sector Stability Fund can do for your country. Let's build a stronger financial system together.
Good afternoon, and thank you for joining us today. My name is Catriona Purfield, and I'm the director of the IMF's Institute for Capacity Development. And it's my pleasure to welcome you, our audience, and our colleagues online to our event today. As you could see in our video, we are here today to talk about the financial stability risks faced by emerging and developing countries, and critically, how the IMF's capacity development support can assist in addressing them. Let me introduce our esteemed panelists who are joining us today to discuss and share their experiences and knowledge. A warm welcome to Ahmet Ismaili, the Governor of the Central Bank of Kosovo, the wave there, and a warm welcome to Abdirahman Mohamed Abdullahi, Governor of the Central Bank of Somalia. We also have our donor partner, Abdullah BinZaraah, Assistant Minister of Finance for Macro-Fiscal Policies and International Relations of Saudi Arabia, and my colleague, Tobias Adrian, the IMF's Financial Counsellor and Director of the Monetary and Capital Markets Department that leads the IMF's work on financial stability. But before we get into our discussion today, I am thrilled to introduce Dan Katz, our first Deputy Managing Director of the IMF, and Dan has kindly agreed to set the stage for our discussion today with some opening remarks. Dan, the floor is yours. Thank you.
Well, thank you, Kat, and good afternoon, everyone. I'm pleased to welcome you all to this event focusing on the IMF's work to build financial resilience and stability. And let me also just add, this is my first set of remarks as First Deputy Managing Director, and so it is a particularly great honor to deliver those remarks to such an important event like this one. The global economy is facing a period of profound transformation. Significant shifts in policies, rules of engagement, and partnerships are reshaping the international economic system. This morning, we presented our updated Global Financial Stability Report. Thanks very much, Tobias, for all your work on that. All participants in the international system are likely to be affected in significant ways given the speed and scale of the ongoing policy shifts. We must pay particular attention to emerging and developing countries, especially low-income and fragile states that are vulnerable to shocks, including from financial markets. Tobias will shortly elaborate on the financial stability challenges that these countries face. Let me only say that they are especially at risk because of their limited policy buffers, weaker institutions, and high funding costs. This is a concern for the global community and for the IMF. Nothing is more destructive for growth and economic development than macroeconomic and financial instability. It is costly and difficult to overcome and hinders sustained growth, investment, and job creation. This is why the fund's capacity development support to member countries is so important. And for me, it's a particular honor to have the Institute for Capacity Development in my portfolio, and I really consider it to be at the core of the fund's work and of my work here at the fund. For 60 years, our capacity development work, comprising technical assistance and training, has been the core tool for strengthening institutional and human capital across our membership. It empowers authorities to devise and implement policies that foster financial stability and growth. And we continuously aim to improve the way we deliver capacity development, or CD, to ensure we meet members' needs. This requires close coordination with member country authorities and other development partners. And of course, we also ensure close integration of our CD activities with the other core elements of our work, the IMF surveillance and lending programs. Our CD work remains at the heart of what we do and in high demand. And it would not be possible without the generous contributions from our donor partners, to whom we are grateful. Indeed, 2/3 of the IMF's direct spending on CD is financed by our donors. Today, you will hear firsthand the experience of 2 countries that have strengthened their financial sector resilience and financial sector statistics critically about the challenges and lessons along the way. We'll also hear from the Kingdom of Saudi Arabia, who is a key and deeply engaged donor partner to the Financial Sector Stability Fund, or the FSSF, which is a difficult acronym to say, but I'm sure Tobias will do a better job than I do right now. So please excuse me if I butcher FSSF. No, but really, it really is one of our flagship partnership platforms, and it supports stronger financial foundations, including financial sector statistics in low and lower middle income and fragile countries, like Kosovo and Somalia, who we'll hear from today. You've just seen the introductory video on the FSSF. You'll hear more about its critical work and achievements during the panel discussion. So without further ado, let me pass the floor back to Kat, our moderator, to start the discussion. Thank you very much.
Dan, many thanks for framing our discussion today so well, and I think critically underscoring the importance of financial stability for growth, job creation, and development. Now, Tobias, turning to you. This morning you launched the IMF's Global Financial Stability Report that assesses the stability risks and the systemic risks facing the global financial system. Against a backdrop of rapid shifts, elevated global vulnerabilities, Dan emphasized that emerging and developing economies are particularly susceptible to global shocks. What are the financial stability challenges facing these economies, especially those in low-income and fragile states?
Yeah, thanks so much, Kat. And I'm happy to kick off the discussion, giving some color on global markets and what it means for low-income countries in particular. So what we're seeing is abandoned liquidity. We have easy financial conditions at the moment. You know, you can see that, for example, by looking at market volatility, which is fairly aligned with historical averages. Credit spreads are pretty tight. Sovereign spreads of low-income countries in particular are very low by historical standards. And we have seen quite a bit of bond issuance of frontier markets. So those are low-income countries with market access throughout the year. So we are not quite in a record year, but we are well above average issuance levels. So what does it mean for financial stability? Well, you can issue, that means you're taking on more leverage, so you have to manage this leverage carefully. And so what we're doing in the financial sector stability reviews, which are funded by the Financial Sector Stability Fund, are really these, is really the focus on financial stability issues that make sure that countries deploy the issuance of debt and domestic capital markets in a way that keeps them resilient to adverse shocks.
So the risks you outline, the elevated issuance, the leverage, the higher interest rates. Against that backdrop, how is the IMF supporting its most vulnerable member countries to mitigate these risks and to preserve financial stability?
Yeah, so what we're doing in our capacity development is to directly engage with member countries. So my department, the Monetary and Capital Markets Department, is doing over 1,000 missions in up to 100 countries per year to basically help countries build institutional capacity. And that ranges from regulatory agencies to debt management offices to central banks and to resolution agencies. So we basically cover everything that matters for monetary and financial stability in countries. Our capacity development at the IMF complements other work we do with member countries, such as surveillance, which is both multilateral surveillance, such as the GFSR, the Global Financial Stability Report that Kat just mentioned, but also bilateral surveillance, such as the Article 4s that we do in all our member countries. And of course, the capacity development is synergetic and complementary to the surveillance work.
Tobias, thank you for emphasizing that close integration between our capacity development and our surveillance and our lending. It's essential to the effectiveness of our support. But let's take a closer look now at the challenges and look at how two of our member countries are addressing them. Now, Kosovo is a country that has made substantial progress in strengthening its financial stability framework in recent years. Now, turning to you, Governor Ismaili. As part of this journey, a fully fledged financial stability diagnostic was carried out in Kosovo in 2019. And you've been working with IMF experts in implementing a follow-up technical assistance program. What has made this cooperation impactful, but also tell us a little bit about what the main challenges were, Governor.
Yes, thank you very much. First of all, Director Purfield, congratulations as well for your new role. It's a real honor to be here today in this panel. Let me thank the organizers for the chance to share Kosovo experience, but as well, I would warm greeting my fellow panelists here today and audience. Let me give a little bit of context of the central bank. So Central Bank of Kosovo was established in 1999, and from that day, we have benefited strongly by IMF support in a true partnership. This has helped the bank to build solid system, institutional capacity, but as well enable us to have a robust and resilient financial sector. So central bank core mandate is in financial stability, as we are a Euroized economy. And that's why FSSR was really helpful, and the IMF itself in the core mandate was productive. So FSSR came at the right time. As our financial sector was expanding and becoming more complex, IMF, true to its mission, introduced the FSSR, and just in time. As Central Bank of Kosovo is the sole authority in the country, entrusted with broad and complex mandate, as well the FSSR was very specific and unique. It has comprehensively covered all key functions, which I will describe later. It has provided a comprehensive evidence-based diagnostic that guided us with a clear and actionable recommendations. They find this has helped us a lot for the bank we are today. Let me highlight the key recommendations that were implemented. First, governance of the central bank. It has been fundamentally strengthened. We have modernized our decision-making framework. We have clarified and formalized the roles and responsibilities between two boards and established a dedicated risk management to ensure stronger oversight of our institutional risks. Together with a clear accountability framework, these reforms have made the bank more transparent, more agile, and better equipped for the future. Second was financial sector supervision regulatory framework has been significantly enhanced. We have moved toward a fully risk-based approach, strengthened data analytics, improved coordination, and enhanced legislation to ensure more consistent and forward-looking supervision. Third was macroprudential policy. We have made considerable progress. We have established the first elements of systemic risk monitoring framework, including early warning indicators and regular financial stability assessments. This has been equally important to bring us together and have a shared view. The fourth was on foundation of data-driven policy. Our financial statistics and reporting now meet financial standards and given a clear view on risks and trends across the system, and we are working toward SDDS implementation. And finally, financial inclusion and consumer protection. We have advanced through several actions already completed. We have upgraded the credit registry to strengthen the data for credit assessment. We have launched an online platform to improve transparency for our customers. And we have enhanced regulatory framework for mobile payments and electronic signatures, laying the foundation for a more inclusive and digital financial system. In summary, out of 50 recommendations that came out of FSSR, I'm proud to report that almost all of them have been already completed and confirmed. But let me speak a little bit on an impact on the sector, but beyond. The FSSR was not just a diagnostic exercise. It has provided a strategic direction for strengthening institutional governance, building capacities, and advancing financial system and stability. This has been a transformative journey for us, marked by both strong commitment, leadership, active staff engagement, and reinforced by different IMF programs and pragmatic technical assistance, leading to sustainable and long-lasting results. Let me note that those achievements has been a broader impact. One, steady expansion of the financial sector was as a result of FSSR as well. As we have improved our governance institutional strength, and we have made a continuous progress towards sustainable resilience, World Bank and IMF decided to remove Kosovo from FCV list, from fragility list. That is one of the contribution. And finally, we got for the first time sovereign credit rating, which was issued last year, and that has confirmed for the first time BB- as a credit rating, grade for us. So those are indirect effects of the FSSR. But of course, successful implementation was not without challenges. So let me just say that our journey wasn't without challenges. The pandemic slowed down the assistance because some of the reforms have to be in person because of the complexity. But as well, we have faced, as other central banks, capacity constraints, mainly shortage of skill-specific staff, but as well governance deficiencies, which were also identified and addressed through FSSR. Therefore, the functionalization of governance structures in line with FSSR recommendation has played an important role to successful implementation of these reforms. FSSR gave us clarity, direction, and has shaped our policies. It helped us to stay focused, resilient, and forward-looking. In short, FSSR created a culture of continuous improvement of the central bank, one that goes beyond individual projects and has become part of our institutional DNA. Thank you.
Thank you for that. Something else to hear, 50 recommendations from the report. But importantly, what I took away was that you were in the driver's seat and that the support was very customized to your needs, given the shocks faced in the period, but also taking in mind the capacity in the central bank. So thank you for sharing that with us.
Thank you.
Now turning to you, Governor Abdullahi. Somalia has been rebuilding its economic institutions and capacity over the past decade amid a very challenging security situation, and much has been achieved. And Somalia has also just undergone a financial sector stability review too. Can I ask you, why did you request the IMF support? And how did this diagnostic help inform and shape your plans for enhancing financial sector regulation and supervision in Somalia? Thank you, Governor.
Yeah, thank you for having me. It's a pleasure to be here with you. And let me also take the opportunity to thank the fund for continuous support. We wouldn't have been able to rebuild the central bank from scratch when the state collapsed and the central bank was non-existent for over a decade and a half. Thank you for that. Coming back to your question, I learned about the FSSF through our engagement with the fund experts. And because of its nature of diagnostic nature and structure, it resonated with our needs immediately. Our financial sector has developed and have been growing and diversifying in recent years, but given the highly dollarized nature of our economy, the standard monetary policy has limited or no effect on inflation. Therefore, we make the strategic decision to focus on financial stability, to strengthen financial stability framework as the most effective route to achieve financial sector stability. Therefore, FSSR was a natural vehicle for us. There was an FSSR mission in Somalia conducted in August 2024, which identified critical gaps and gave us a sequenced technical assistance roadmap, which is now an integral part of our reform agenda. It provided a structured view of our strengths and vulnerabilities and showed the value of prioritized step-by-step reform path. The report highlighted 4 areas of urgent capacity development area: financial regulation and supervision, systemic risk analysis, financial sector statistics, and mobile money and payment system oversight. It also underscored essential gaps in the regulatory framework, which required immediate attention. Therefore, we developed 4 key legislations. We revised the financial institution law, anti-money law, insurance law, and national payment bill. We have now embedded all these findings in our strategy of the next 4 years. It involves improving the data quality from supervised entities, adopting regulatory technology for risk-based supervision, and rolling out targeted capacity building in financial stability analysis and regulatory practice. Let me stop there.
Governor, thank you, both of you, for sharing your experiences. Now, you've given me, both in very contrasting situations, an important opportunity to recall that this hands-on support that's tailored to a wide variety of circumstances, to the EU, to coming out of a conflict, this tailored support would not be possible to provide without the generous, very generous support of our donor partners. Now, Minister BinZaraah, Saudi Arabia is one of the IMF's key CD or capacity development donor partners and is also a contributor to the Financial Sector Stability Fund that undertakes this work. What is in it for you? Why does Saudi Arabia invest in strengthening the financial systems in low-income and fragile states? Minister.
Thank you very much, and thank you for making this happen. I think gathering participants and stakeholders in such panel is great, so thank you for that. I would like to start by reaffirming 2 well-established facts. First, financial sector crises comes at a high cost. They disrupt economies, they trigger deposit outflows, they weaken currencies, and also they impose a heavy burden on public finances. And this obviously ultimately impact and affect the livelihood of ordinary people and everyone. Second, In today's interconnected world, any financial instability is usually or rarely rarely stays within its first country in crisis. It spills over quickly across borders to many other countries, and this basically impacts systematic important economies and also low-income countries, and this basically have its toll on human and economies alike. In fragile states and low-income countries, where resources are limited and the challenges are many, it's tempting to postpone regulatory and supervisory reforms, but deferring such action is not just a delay, it's also a risk multiplier. This is why the Kingdom of Saudi Arabia views the Financial Sector Stability Fund not just a future solution, but also a present necessity. It is a vital instrument. It is a vital instrument to help countries build the resilience of their financial systems now before the crisis unfolds, and not actually when the damage is already done. We see clear and compelling returns to investing in the financial sector stability. And we firmly believe that the IMF, with its deep expertise and trusted reputation, is uniquely positioned to lead this mission. Looking beyond the FSSF, our commitment is long-term and strategic through the 10 years partnership agreement that was signed between the Kingdom of Saudi Arabia and the IMF back in August 2024. Saudi Arabia is proud to support capacity building across a wide range of thematic areas with projected funding of nearly $280 million. So the funding that the Kingdom provides covers a wide range of themes, and this includes the thematic funds such as FSSF and the Global Public Finance Partnership, in addition to the D4D, which all allows response to the real-time needs of countries navigating uncertainty. In addition to that, also regional technical assistance centers across Africa, where we believe the combination of proximity and practical knowledge delivers high returns. And finally, in addition to those themes, closer to home, we also prioritize many of the economies that are facing challenges in the Middle East, including those that are recovering from conflicts or navigating through deep structural reforms. In all of this, our approach is guided by partnership. We will work hand in hand with the IMF in the years ahead to ensure this support translates into real impact, not just across institutions and systems, but across lives and communities. Because at its core, financial stability is not just a technical goal, it's a human imperative. Thank you very much.
Minister BinZaraah, thank you so much for reminding us that in an interconnected world that is shock-prone, financial stability is a shared responsibility. Thank you so much for your generous support and for the long-term commitment that allows us to provide the on-the-ground support that advances these reforms and improves the lives in a very tangible way. Thank you. Now, turning back to you, Governor Ismaili, I understand Kosovo is the first country in the capacity development process to request a follow-up financial sector stability review. Now, why did you request a follow-up review? What was the main reason? And how do you see this follow-up helping you build a stronger, more resilient financial sector?
Thank you very much. Let me express the gratitude as well to the donors to fund FSSF, because I believe you can see by firsthand how contributive that was for us. And this is really a shared responsibility, so we appreciate that very much. The decision to request an updated FSSR arose naturally. The implementation of 2019 FSSR recommendation was transformative, allowing us to significantly upgrade the Kosovo financial sector oversight framework. But yes, despite progress, considerable progress, some gaps remained. At the same time, the financial landscape has evolved rapidly. Our European integration path has evolved. Digitalization and technological innovation has reshaped service delivery and risks associated. Non-bank financial institutions have expanded their presence. So we believe that an update of FSSR would be a great opportunity to recalibrate and develop, let's say, a second generation reforms that ensure that our roadmap remains aligned with emerging risks and realities to reflect the strategic objective plans as well. So the update also provides the value opportunity for us to strengthen our reform momentum and sharpen our focus on most critical areas, such as particularly financial sector oversight, but as well development of macroprudential policies and tools, including stress testing and macro modeling. Our staff now are directly involved in both diagnostic work, but as well a follow-up process, applying the skills that have developed during the earlier FSSR. This hands-on engagement is deepening our expertise and embedding lasting institutional changes. In many ways, an updated FSSR reflects a deepening partnership with IMF, one that extends beyond technical reforms to focus on developing the people, systems, and the institutional capacity needed to make those reforms sustainable. For us, FSSR is not a one-time exercise. It is a continuous journey toward greater resilience and a truly forward-looking financial stability culture. It has guided our policy development and continue to shape our potential program or technical assistance currently under discussions with the relevant IMF counterparts. So finally, based on our experience, I kindly encourage member countries to engage with IMF on FSSR, and if helpful, we are pleased to share what we consider a success story. Thank you.
Thank you, Governor. Change is a constant, and you're reminding us the need for regulation and reform to keep pace with it. So thank you for sharing that. Now, Governor Abdullahi, speaking of the next steps, the findings of the Financial Sector Stability Review have been incorporated into the Central Bank of Somalia's new 5-year strategic plan. So now, what is your expectations of us, the IMF, in terms of follow-up technical assistance to help you implement that plan and build capacity in the central bank?
Yeah, thank you once again. The follow-up technical assistance is central to our strategic plan, as I said. Our expectation is ambitious, but also pragmatic. We developed a board-endorsed technical assistance roadmap in collaboration with the fund experts. It targets 4 priority areas: the risk-based supervision, prudential tools, resilient payment systems, including mobile money oversight, and high-quality data for systemic risk analysis. We expect the technical assistant to deliver sequenced and well-prioritized support to reflect Somalia's unique context as a fragile and conflict-affected state. For instance, in the area of systemic risk analysis, we aim to improve the stress testing capability to anticipate vulnerability and act early. On the mobile money area, which by far is the biggest payment service provider in my country, we seek support in establishing reporting standards and supervisory tools that enable us to monitor the sector more effectively. With all of these centered, reliable statistics, the follow-up TAs help us improve the coverage and the quality of the data, ensuring consistency across monetary, financial, and external sector statistics. Our staff will gain hands-on exposure to international best practice, and we're particularly grateful for the flexibility in delivery modality, including the virtual missions and regional engagements, which is well suited to our operating realities. We also encourage the fund, where it's possible, to consider more program-based capacity development rather than standalone or one-off activities. The goal is to transform institution, build central bank with credible as a custodian of financial stability, with a strong governance and analytical capabilities. Thank you.
Governor, you really sent us a clear message, well prioritized, not one-off, but programmatic, and to help you be transformative. You also mentioned a very key word for the IMF, data and statistics. We know we would not be at the IMF if we did not mention those two words. And I see we have my colleague, Bert Krause, the IMF's chief statistician and data officer with us today in the front row. And Bert, I'm sure you would agree that like a driver of a car, a central bank needs timely, accurate, and reliable data to know where the risks lie, but also how to focus their supervisory efforts. So how can vulnerable countries build their capacity to collect robust financial sector data at a time of rapid technological change? Bert, to you.
Well, thank you, Kat, for this important question. Statistics and data have come up in the panel a number of times already this afternoon, and rightly so, because good and reliable data are indispensable for maintaining financial stability. Data is the compass guiding policymakers to identify risks, monitor vulnerabilities, and design effective policy. Without timely, comprehensive data, policymakers are navigating in the dark. So addressing these challenges requires focused, sustainable efforts both by my department, the statistics department, and the authorities to build technical capacity and modernize statistical systems in low-income and fragile states. I want to mention three things here. Capacity building is at the core. We work closely with central banks and other financial regulators to strengthen their ability to produce and disseminate high-quality, timely financial sector statistics. But that's not enough. We also need to build strong institutional and legal frameworks. That's necessary to ensure that statistics producing processes are robust, transparent, and enforceable. And partnerships are essential. Donor support and initiatives like the Financial Sector Stability Fund and the D4D Fund that was mentioned by Minister BinZaraah have been very instrumental in driving progress. The strong collaboration between the Statistics Department and Tobias Department, MCM, ensured that statistics are viewed as an integral part of financial stability monitoring. And that makes our efforts more targeted, leads to concrete outcomes, even in most vulnerable environments. An example is Somalia, where their financial soundness indicators were produced for the first time and a monetary statistics compilation framework was introduced. Vulnerable countries often face resource constraints, and that's why it's crucial to focus on the most important things, the right things to do. And again, I want to mention three things. First, it's important to have more disaggregated balance sheet data to support the understanding of from womb to womb exposures and risk built up for monitoring financial stability. But also to expand the coverage of the financial sector statistics to include non-bank financial institutions, MBFIs. They have grown in prominence. And similarly, to reflect financial innovations, such as fintech credit, digital payments, mobile money was mentioned already, they have important implications for financial stability. And the third thing is that we should be aware of tail-end risks. FSIs provide aggregate trends, but that can mask isolated pockets of risk exposures. In the new FSI compilation guide, there's a recommendation to supplement the FSIs with concentration and distribution measures. And these help detect these vulnerabilities. A few countries already produce and disseminate these, and we encourage other countries to follow suit. So our department, Statistics, is at the frontier of developing methodologies and tools to help countries incorporate these data into financial sector analysis. So in conclusion, better and timely data enables more accurate risk assessment, agile and sharper policies, and stronger resilience against shock. Reliable data is not a luxury. For vulnerable countries, and to be honest, for all countries, it's the cornerstone of building resilience and protecting financial stability. Again, thanks for the question, Kat.
Bert, thank you for those insights and reminding us of the critical importance of data if we are to be aware of where we're going and where the risks are. Now, turning back to the stage and to Tobias, you've heard our panelists' perspectives, both as policymakers and donors. So what do you see are the top priorities for the IMF's capacity development support so to strengthen countries' resilience to the potential risks that you started us out with today?
Yeah, thanks so much. And I think it was really illuminating to listen from Somalia and Kosovo in terms of their experience with the financial sector stability review. And let me also extend my thanks to Saudi Arabia as well as other donors that I see here in the audience that are supporting the FSSF, that is making this work with countries possible. You know, Luxembourg, Switzerland, Sweden, as well as China, Korea, and Germany are some of the countries that are supporting us in this endeavor. So, you know, what are the number one priorities? You know, we have done these diagnostic FSSRs in about 30 countries to date. There are another 50 countries that are eligible to do FSSRs. And, you know, it really, the punchline is really a strategic approach to capacity development. I would say that there are three priorities, and we already heard that from both countries here on the stage. The first one is regulation and supervision, so regulating your banks and supervising your banks, as well as the non-banks, the security markets, pension funds, insurance companies. You know, that is the number one priority for financial stability. Secondly is the systemic risk oversight. So we have done work with financial stability departments and with macroprudential departments in many countries, such as Cambodia, Uzbekistan, Sierra Leone, Gambia, Sri Lanka, on these issues about systemic risk oversight. And, you know, ultimately, you know, the regulation of institutions has to have this macroprudential and systemic overlay to really be effective in making sure that the system as a whole is safe. And finally, we're doing a lot of work on crisis management, so the ability to resolve banks, to restructure banks, and to have a financial safety net more broadly for depositors, but also for non-banks. So these are the three priorities: regulation and supervision, systemic risk oversight, and then crisis management and the financial safety net.
You couldn't be clearer, and with 50 countries, it's quite extensive. These are very clear priorities. Know where you're going, keep a watch on everything, banks and non-banks. Have a systemic view and be prepared with safety nets and for crisis management. So very clear priorities. Now, I want to thank our panelists for their insightful discussion and to open the floor to you, our audience, for some questions. Please feel free to address your questions to any speaker on stage. State your name, but I ask you to limit yourself to one question We have microphones in the middle of the hall here, both here, and one more, I think, to the left over there. You're right. So please walk up to the microphones with your question. And as people walk to the mics, I understand we have a representative from the delegation of Cambodia to kick us off with the first question. Thank you for starting us today.
Thank you. My name is Hero, Deputy General of Policy and International Cooperation. We work closely on financial stability issue of the National Bank of Cambodia. And it was very insightful to hear the reflection from Kosovo and Somalia on their experience and success with the FSSO. Cambodia also underwent an FSSO diagnostic in 2019, followed by a sequent technical assistance work plan that concluded in 2024. The engagement placed strong emphasis on macroprudential policy and stress testing. The FSSO proved instrumental in helping the National Bank of Cambodia achieve tangible progress across all dimensions of macroprudential policy making, including preparation and publication of financial stability document, establishment of financial stability department, and as well as improve communication on financial stability issue. All those FSSO projects has formally concluded for Cambodia. We hope to continue benefit from the IMF capacity development support. So my question here, how do you see the CD engagement involving with the country like Cambodia, where the project has been ended, but many activities still going on? Thank you.
An excellent question. Governor Ismaili, would you like to take that?
I couldn't hear well. The question was about after the program was ended, what do you see there? Is that the question?
Yeah, how do you follow up on the FSSR?
Yeah.
Okay. Thank you very much, first of all, for the question and for your reforms that you are doing are highly acknowledged. After the FSSR was ended, and it was delayed, as I told, because of circumstances which were out of our control, we did an impact assessment, internal impact assessment, and we have a special way to follow up the recommendation within the team in different departments. The fact that all recommendations are for central bank, because we are the sole authority in the country, has helped as well to manage this process. After we had finished the FSSR, we had an impact assessment, and we called for a mission to review those, and that's how we came for an updated FSSR. And some of the issues that Mr. Tobias mentioned on crisis management and some other issues have been raised, and we are going to follow that up. So as I told, I do not see this as a one-shot. This is a continuous work. So making sure that the follow-up recommendations are timely and sharp is something that contributes more in impactful results. Thank you.
Tobias, do you want to come in on this?
Yeah, absolutely. So I think Cambodia is a very good example of a country where we had an early engagement in this program. We started the program together with our statistics department back in 2017. And I had the pleasure of visiting the Central Bank of Cambodia back in 2019 when the FSSR was ongoing. You know, it's really the diagnostic that is setting the stage for TA over several years. And I think the follow-up is to either continue the TA or do this diagnostic follow-up of the FSSR, depending on what the needs are of the country. But we are, of course, looking forward to engage further with the authorities in Cambodia.
Thank you, Tobias. I see we've got some questions at the center of the floor. Maybe we can take 2 or 3 so we get the momentum going. Over to you, and thank you for stepping forward.
I love asking questions. So, hi, I'm Vanessa. I will contextualize my question that I'm not an economist, but I do analyze data. I'm a geospatial analyst. I make maps, and so I'm very interested in this conversation because, of course, all of this is geopolitical, global in every way. I heard the discussion consistently throughout of high-quality data for system risk analysis, as well as the discussion of improving your specific data to become more high quality. My question was, what exactly are the variables that make high-quality risk analysis data, and what are the variations that exist when it's non-existent versus just okay versus great, so that I can pull that into my work?
So what makes high-quality data?
Yeah.
And what are the systems? So let's take a second question so we get some going. And I see you already, Doe. You want to come in, Governor?
Right. No, I struggle to hear the question, so.
Yeah, thank you very much. My name is Dr. Fasha. I'm a special advisor to the Nigerian President on Economy. I wanted to know if beyond the traditional banking system or financial system as we know it, does the FSSF and the work you're doing in the fund and also with your donors figure in the rapidly changing financial sector, especially the impact of digital currencies, neobanks, the fast evolving financial system as we know it, and also the growing roles of banks, including investment banks, in money creation beyond financial intermediation. And where do you think the next financial crisis is going to come from? Thank you very much.
Thank you. And the last question.
Okay, thank you so much. Ahmet Salifu is my name. I work as Executive Director of Africa Youth Growth Foundation based in Nigeria. My question has to do with artificial intelligence. Listening to the governors, little have been said about artificial intelligence and how that have been applied to strengthen their various financial systems. To what extent in their current practice and system have they applied artificial intelligence to improve their innovation, and also what risk mitigation strategy have they put in place to also forestall potential risk as a result of artificial intelligence? Thank you.
Thank you. I think we've got a rich set of questions there to kick us off. Maybe the first question I understood to say, what makes high quality data? What are the roles of digital and non-bank in the landscape at the moment, and how is it changing the risk landscape? And what are the current practices for improving cooperation with the central banks? I know it's been quite hard to hear with the echo, so I really hope we captured the essence of the questions. Forgive us, it's quite an echo, but maybe to Tobias, would you like to kick us off, and then we'll...
Absolutely. So, what makes high quality data? So, we support our membership by providing technical assistance from the statistics department to the statistics departments in member countries. And we actually have standards that are assessed in countries to make sure that the statistics departments are really using those standards that are internationally acknowledged. Of course, there's also a lot of private sector data that is extremely useful. We are not assessing the standards of the private sector data, but we are certainly a big user of private sector data as well. And the quality really depends on the particular data sources. So we spend a lot of time, cleaning data to make sure that it's adequate for the purposes we use it for. Now, turning to the second question, which is about non-bank financial intermediation and new technologies such as crypto assets in particular. So, you know, we do also provide technical assistance on crypto assets. Actually, one of our very first engagements was in one of the neighboring countries of Kosovo, in Albania, where we supported the authorities in thinking through the legal and regulatory approaches to crypto assets. And we have since done that in dozens of countries around the world. So we do a lot of work on crypto policy frameworks, and we are ready to support our membership. We also do a lot of work on payments, both domestic payment systems, cross-border payment systems, and that is certainly another potential pathway for the FSSR. And finally, we do a lot of work on security market regulation as well. So we're working closely with IASCO, which is the international standard-setting body for security markets, and we provide ample assistance there to our membership as well.
Tobias, I'm just looking at time. I want to thank the audience for their questions, and we only have a minute or so left to wrap up. And I want us to have one last chance to hear from our panelists. And I'm going to ask each of them in a mere 20 seconds to identify the one issue they believe is a priority to address the financial stability risks that we see in developing countries. Minister BinZaraah, we'll start with you and then move across.
Oh, so thank you. I guess one of the most pressing matters nowadays are debt levels across countries. And I think we have seen data that shows that the levels of debt are reaching to levels that are unprecedented. Without proper control and prudent measures, this might cause a lot of problems going forward, either in advanced economies or also in low-income countries.
Thank you for that, Minister. Minister Abdullahi.
Yeah, in our context, I would say strengthen oversight of the under-regulated sectors. And specifically, I'm talking about the mobile money sector. Reason being, it has systemic importance. It's by far the biggest payment service provider we have. Last year alone, it handled over 12 billion US dollars. So it is that sector, I would say. Thank you.
Governor Ismaili.
Thank you. If I have to choose one, that would be strengthening analytical capacity for forward-looking risk assessment, including new risks from fintech and non-banks, which is essential for strengthening resilience in small and open economies, where investing in people, data, and systems, including AI, is key to safeguarding financial stability. And 2 more seconds, I want to thank and be grateful to the IMF leadership, to MCM, European Department, and all donors to support us. A special thank to Mission Chief, to Regional Director, and to all team of experts that have been working with us and supporting us for something which we have achieved together. Thank you very much once again.
Thank you. Last but not least, Tobias.
Yeah, so what is so great in working on capacity development is that we directly engage with staff in the member countries that are making sure that their financial systems are safe. So my top priority is building human capital in the member countries in order to provide supervision and regulation, systemic risk assessment, and financial safety networks. So it's really the human element that is at the core of it all.
Well, let me conclude our panel today by thanking our excellent speakers, you, our audience, and for all the questions. I know we did not get to everyone with the questions. We will have a QR code where you can leave your questions or comments, and please give us your feedback. Now, our discussion today gave us an opportunity to share experiences and understand how we can work together to preserve financial stability that is so essential for underpinning resilient growth. The IMF is your partner in building strong institutions. And if you want to learn more about how we do this on the ground across the world, I encourage you to visit our capacity development booth that is just behind you here with the sign Learn. You can't miss it behind you. I want to conclude by saying thank you. I wish you all a fruitful annual meetings. Thank you and goodbye.
Thank you.